Welcome back everyone. Here at Alpha Finance, we're all about finding excess returns in the market and growing our wealth. Since time is money, I'll get right into it. Today, I'm going to be talking about Taiwan Semiconductor. I'll give a quick overview of what I'll be talking about, and there will be timestamps in the description in case you want to watch ahead, but I recommend watching the whole video to get a good overview. I'm going to start off giving some background on the company, then on the industry it operates in, specifically semiconductors, and the outlook for that industry in the next decade. Then, I'll look at the company's financials, making a note of its recent fourth quarter report from January 14th. By analyzing these factors, we'll be able to see whether Taiwan Semiconductor is a good stock to invest in today. If any of this sounds interesting to you, make sure to subscribe and turn notifications on so you get alerted when my next video comes out. Just a quick disclaimer before we get started. Remember, I am not a financial advisor and consider all investments at your own risk. Let's dive right in. Taiwan Semiconductor is the world's largest and most valuable semiconductor company, where some of the world's largest technology companies like AMD and Apple outsource the production of their chips. TSMC is the world market leader in the chipmaking industry with 54% market share, with Samsung a distant second at 17% market share. Taiwan Semiconductor has a large and diverse global customer base, with its semiconductors covering a wide variety of applications in the computer, consumer, industrial, and other segments. This gives Taiwan Semiconductor exposure to a variety of end markets, including mobile devices, high-performance computing, automotive electronics, and Internet of Things. This diversification helps smooth fluctuations in demand, helping the company maintain its performance and profitability as demand fluctuates. Taiwan Semiconductor is the leader in the semiconductor market worldwide, so looking at that industry and the growth potential, the world's demand for semiconductors is fueled by growth in 5G, artificial intelligence, renewable energy, and much more, including electric vehicles, so the potential for industry growth is massive. In particular, the strongest growth is expected from advanced and specialty technologies, including smartphones, automotive technologies, and Internet of Things. As outlined in my previous video on Nokia, 5G especially is expected to be a massive growth play. Crucially, TSMC will be the company that 5G companies outsource their chip production to as demand grows. Likewise, in research from Wood Mackenzie, quote, "The 2020s are set to be the decade of the electric vehicle, with both BEVs, battery electric vehicles, and PHEVs, plug-in hybrids, expected to grow massively, especially as regulation makes automakers switch to these vehicles." The crux of this for TSMC is that each of these electric vehicles rely heavily on semiconductors for managing battery, smart technology, and especially features like cruise control. Once autonomous driving becomes more prevalent, this effect will be even more significant. In order for these technologies to be possible, you need chips, and Taiwan Semiconductor will be the company doing the majority of the manufacturing of these chips, as it is currently the market leader with over 50% market share. One last bit of research on the semiconductor market from PwC. It's clear that the market is poised for massive growth from a variety of different industries, as seen in this research over the next decade. Therefore, the company is not too exposed to a certain demographic. Clearly, the semiconductor market is poised for massive growth, with Taiwan Semiconductor perfectly set to take control of this market as it grows into the future as the market leader. Now let's look at Taiwan Semiconductor's financials to see if it will be able to capitalize on this growth properly. It turns out Taiwan Semiconductor's financials are what really makes this company stand out. I mean, it stands out as one of those world companies like Microsoft or Apple that has an extraordinary balance sheet and financial position. Let me go over some of the numbers and specifics. Firstly, although already massive, the company's revenue is growing at high rates, with 5 to 10% revenue growth expected in the next few years. Beyond that, the company's margins on top of this revenue are immense, with approximately a 50% gross profit margin, which is extremely high. And based on that, the company has a high return on equity of over 20%. Based on this performance, the company's dividends have quadrupled over the last decade, and on top of this, the company has not needed to issue any shares because they grow organically. With all of this in mind, the company is a financial machine, producing almost $6 billion in free cash flow a year. And what's exciting about this is the company isn't just paying out its cash into its investors, rather it's reinvesting it into the company to maintain its growth going forward. The company spends an absolutely absurd amount on capital expenditure, at approximately 50% of revenue, with it expected to fall to about 30% of revenue in the next couple years. But the reason for this is really good. Essentially, the company is not sitting idly by waiting to lose market share. Rather, it's spending money to capitalize on the industry growth. So no competitor is even coming close to Taiwan Semiconductor in terms of spending on research and development. And if all of this wasn't enough, the company has over $30 billion in cash and marketable securities, while only having $7 billion in total debt. In essence, this company is a money machine. It has incredible levels of revenue, incredible margins, and produces superb free cash flow, which is able to maintain very high capital expenditure spending. With this, it's no wonder how the company has 50% of market share, because they capture the market through their spending and investment. Before I conclude, I want to quickly go over some price action that has happened in the last week and a half. In particular, back on January 21st, the company hit an all-time high at about $136 on the New York Stock Exchange. However, today, on February 1st, it sits at about $122. And the reason for this is that it dropped after Bloomberg reported that its competitor, Samsung, is planning to create its own chip-making foundry in the US. And according to the report, Samsung's looking to invest more than $10 billion in creating a foundry in Austin, Texas. And over the next decade, apparently Samsung's planning to invest $116 billion in its chip fabrication and foundry business, with the construction of this factory starting in 2023. And this news was released the day after Taiwan Semiconductor hit its all-time high, so it's pulled back a bit since that news was released. Of course, there's some reason to be cautious about the stock considering the investment that Samsung's putting in, but what I want to keep in mind is that Samsung only has 17% market share compared to Taiwan Semiconductor's 54% market share, and Taiwan Semiconductor is also spending immense amounts of money on R&D and construction. Therefore, I can't see it giving up much of its market share going forward. And even if Samsung is able to recapture some of this market share, the industry growth potential for semiconductors is still so huge that even if Taiwan Semiconductor loses some of its market share, it'll still be growing as a company overall at significant rates. If you take anything from this video, I want it to be the next three things. First, Taiwan Semiconductor is the world market leader with 54% market share compared to its next most competitor, Samsung, at a far distant 17% market share. Secondly, the world's demand for semiconductors is fueled by growth in 5G, artificial intelligence, renewable energy, cryptocurrency mining, electric vehicles, and much more, so the potential for industry growth is massive. Thirdly, Taiwan Semiconductor is one of the most financially robust companies in the world, with massive year-on-year revenue growth, extremely high margins, superb free cash flow, and not to mention almost $30 billion in cash and marketable securities compared to only $7 billion in total debt. Clearly, Taiwan Semiconductor is far and away the market leader in an industry that just keeps on growing. Based on these factors, Taiwan Semiconductor is a company I've invested in and plan to hold long term. As AI, 5G, and electric vehicles all become more prevalent, Taiwan Semiconductor is going to reap the rewards producing the chips for all of these companies. If you enjoyed the video, I would really appreciate it if you would hit the like button, subscribe, and turn notifications on. We make these videos every other day, so make sure to subscribe to stay tuned for the next investment analysis. Remember, this video is for entertainment purposes and not personalized investment advice. You should consider your own unique financial position before making any investments. I hope you enjoyed, and I'll see you next time.